Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator for startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week. This is the 481st session. We started back in 2008 as an experiment, and then we launched 1Mby1M in 2010. So this has been a 10-year plus journey, and we have touched a very large number of people at this point. The community is over 500,000 people, and these roundtables have seen over 150,000 people participate. So it's been fascinating to see what's going on in different parts of the world. And today also you will see that reflected in our programming. The event is being recorded. All recordings of every single roundtable are available on our YouTube channel, 1M1M Roundtables. On Twitter, you can follow us at 1Mby1M and at Stromana. Both channels publish a lot of interesting, enriching content. If you're live tweeting today, please use hashtag 1M1M. This is a roundtable, not a broadcast. We want you to participate as much as possible. So I will open up the line for you to dial into a bit later. We have scheduled programming first, but do plan on participating. And in the meantime, you can definitely participate through the public chat. Just set your public chat to send to all participants. We will start today's session with a conversation with Joshua Posamentier, co-founder and managing partner at Congruent Ventures. Welcome, Joshua, to the show.
Hi there. Thanks for having me.
Pleasure. Where are you dialing from?
I am in the Bay Area, in the East Bay.
Okay. So I'm in Menlo Park.
Ah, I'm not far at all.
Let's start by having you introduce the firm, Congruent Ventures, as well as a bit of your background. Let's get you acquainted with our audience.
Great. So the firm, Congruent Ventures, is a relatively new firm. We were started in 2016. We're on our second fund at this point. This is a $125 million fund. We're focused on early stage companies in the sustainability and clean technology landscape. This includes sectors from alternative energy to food and agriculture, urban and mobility, and sustainable consumption production. So pretty broad spectrum. And within those, we will invest in anything from deep tech and hardware to software to fintech to consumer products, anything that has a sustainability aspect to it.
Okay.
Yeah.
So just to keep this contextual, our focus, 1Mby1M's focus is in IT and IT-enabled services. So if you could, talk primarily about the intersection of your sustainability work and IT and IT-related ventures, that would be terrific.
Yeah, absolutely.
Now, so with that context, could you also elaborate a bit on what your definition of early stage is? Early stage has now fragmented quite a bit, all the way from, pre-seed, seed, post-seed, pre-series A, small series A, large series A. Where in that continuum do you like to play?
So we play anywhere from very first money in to sort of an early Series B in using today's definition. So
okay.
I think north of 80% of our deals have been first institutional checks. So we tend to skew pretty early. We're happy to lead, happy to follow. We have historically led about 2/3 of the deals we've done, but it's not part of our core thesis. So we're happy to do whichever makes sense.
And what is the check size when you operate in the, first check or early check mode? What check sizes do you write?
So historically, we've written checks as small as 150K, and right now we sort of cap it out at for a first check at about 4 million. So it's a very wide range. It really just depends on the situation.
And geography? Do you invest all over the United States, all over the world, only in the Bay Area? What's your scope?
So we have a North American focus, but not a limitation. So just given the small size of the team and our hands-on, typically pretty involved approach, it tends to be easier to focus, closer to home, i.e., in North America. But we have an investment in Eastern Europe. We have been actively looking elsewhere as well. So overseas is within range.
Okay. So let's do a few case studies of the kinds of companies you have invested in. And in doing that, if you could highlight a bit, when did this company come to you? What did you see when they came to you that caught your attention and that compelled you to write checks? Do maybe 2 or 3 of these use cases, and then we will try to understand based on that how you think of deals.
Sure. Any particular ones in the portfolio that you think would be interesting, or should I just pick some that I?
You should pick. I don't know your portfolio at all, so I can't
Sure.
pick.
So let's see. One that's recently raised some money and just top of mind is a company in our portfolio called Amp Robotics. And despite the name, they don't actually manufacture much in the way of robotics, but they're a machine learning and machine vision company that uses advanced machine vision to basically control robots, third-party robots, to sort recycling and really extract more value from that waste stream. So instead of people picking those recycling targets right now, because it's actually a pretty hard machine learning problem, the CEO worked on aspects of this for his PhD thesis in machine learning and spun that into a company, and we were some of the very first investors into that as he left Caltech.
And
so
what university did this research happen at?
He was at Caltech, the CEO. And so we invested close to 3 years ago, and then Sequoia just led their Series A last year. So they're off to the right.
They're selling to businesses, they're selling to machine makers, robot makers, yeah?
Their current customer base are operators, and so they sell their software and along with packaged robotics as well. So they partner with big robotics companies, but they sell to the recycling facilities.
I see. Okay, interesting. Got it. Okay, let's do another one.
Let's see, another one. We have a company called Energetic Insurance, which interestingly is a pure play insurtech company. They make an insurance product backed by a top 5 global reinsurance company to basically do credit enhancement for customers that want to get solar and other energy products but have no credit of their own. So small businesses frequently just don't have, it's not that they have bad credit, they just don't have any credit. If you're a Fortune 500 company, you have good commercial credit, you can borrow money. But if you're a small business, it's a lot more difficult. You have to have a recourse loan, you have to have personal guarantees, and Energetic wraps energy projects that make good financial sense on their own in an insurance product so that you as a small business owner can get financing for them. And so it really opens up a $1 trillion opportunity globally for new energy deployments with better financial tools.
Interesting. Okay. Now, in the 2 examples that you shared so far, talk a bit about how did these companies come to you? Why did they come to you, or how did you find them, and what did they come with?
So Amp Robotics initially came in through a friend who had previously worked at a lab in Colorado, and he'd he joined the company sort of as a business advisor, joined the founder as a business advisor. And I was at a conference, an NREL conference in Denver, and he just caught me in between events, parts of the event, and said, "You have to meet this guy. It's this is an amazing idea." And it was basically the two of them and a PowerPoint presentation. And so that was that was the inception of that new relationship.
So the technology was not in place yet, that they developed the technology after you invested?
So the core technology, the machine learning parts, had mostly been developed, well, at least initially developed in proof of concepted at Caltech. And they had not, I don't think they'd actually built tested this on a real world system yet. But the concept was good. And this is a space that we'd looked in previously for many years and never really made an investment. So we were generally familiar with the problem they were trying to solve. And this seemed like a compelling solution to a problem we already knew existed. That was pretty straightforward.
And what was the check size?
So the round size, which I can speak to, was initially somewhere between 3.5 and 4.5 million. I can't remember exactly where it came in. And so we certainly did a good chunk of that. And then we raised a little more capital, and then the last year was, I think, I don't have the top of my head, under 20 million. So for the Series A.
I see. Okay, let's switch to the other example that you talked about, and what is the trajectory, and how did you find it? What caught your attention? Why, and etc.
So with Energetic, I surprisingly hadn't ever met either of the founders previously. They're both energy space veterans. One from Enernoc, one from Fraunhofer Institute. And so I should have known them, but never crossed paths. I was introduced there via one of their advisors, who I've known for years and years out of the Bay Area. That company's based in Boston, where I'm in Boston historically at least 3 or 4 times a year. But so I was introduced to Energetic through one of their advisors, and introduced extremely early. Both of the co-founders had just left their prior jobs, and had been working with this advisor. And they said, "Look, we're not really ready to raise. Here's what we're doing. What do you think?" And we'll be ready to raise our first money in 3 to 6 months. And let's keep in touch. And so we did exactly that. Kept in touch. They made some more progress. I think they reached out 2 or 3 months later to say, "Here's what we've done. What do you think?" And then I think it was about 6 months.
What had they done? In 2 or 3 months, what had they done?
So this one, the couple of things. So the core of that business is their underwriting engine. It ingests a lot of software, a lot of data from the markets, and provides sort of underwriting guidance. And so what they'd done initially is they had proved that they could gather a lot of data and show, at least preliminarily, that it was good data, that it was valid, and it was something you could base insurance on ultimately. So they proved that. And then the next phase, so that was the first thing. That was the first question they answered. The second question they answered is it possible to structure a product as a startup that's poorly capitalized, or minimally capitalized, with an insurance partner of some sort? And that was the second question they spent probably 3 months sort of digging into and answering, and said, "Look, there is actually a path towards a product here that makes sense in the insurance world." So I'd spent some of this time just coming up to speed on insurance, because I've never invested in an insurance company before. And so that was kind of what I did on the side, but they were doing it in parallel. But proving those two things. So can they get the right kind of data and prove that it should work? And can they structure a product in the space? And they did both of those things. And then, we led their pre-seed round to ensure that they could actually build a product of some sort. So thus far, it had all basically been paper and manual. And then that first pre-seed round enabled them to build sort of a minimum viable product, hack together, and develop a formal relationship with a reinsurance partner. And then we also led the Series Seed, where that was contingent on them actually signing up that reinsurance partner, which they did. And so that was, I think we made the first investment 2.5 years ago, and then we made led the seed last year, about a year ago.
Okay. So, Josh, we've looked at a bit of what you've done and how you operate. Granted, it's very short and very little, but at least we've got a flavor. I want you to kind of look ahead and share with us what in one of your examples, you said you invested in a problem that you were already familiar with, and you found a great technology out of Caltech that addresses that problem, so you were already familiar with the problem domain, and one could posit that you were already looking for a solution to that problem, a company that addresses that problem. Are there other such problems looking ahead that you have identified that you would like to find an entrepreneur team that solves that problem, has the expertise to solve that problem? And please pick the ones that are in the technology, IT and IT-enabled services domain.
Sure. So the way we typically operate, and just to give some context, is we tend to be we have deep theses around certain things, like the areas that we see are huge issues. In reality, we have those theses, but at the same time, we are an early stage firm, and so we look at whatever comes in whenever it comes in, so we're pretty opportunistic in terms of the actual transaction. So some of the challenges I'd say we have that are definitely IT-centric, not challenges, but opportunities we see. There's a lot in supply chain efficiency. We've made two or three bets at least in making supply chains more efficient. One of them was a company that's basically turning paper at the edge of supply chain, so bills of lading and invoices from paper to digital. Pretty straightforward. Another is doing leveraging data and Internet of Things tools to ensure better supply chain quality for food, specifically for grains and seeds. And the third one is doing route optimization, so driving fewer miles to hit fewer stops. So all of those hit a topic that we've looked at before. Areas I'm really interested in right now are making better use of multimodal transportation. So U.S. Rail freight is underutilized dramatically. We have too many trucks on the road. So how do you make these systems interoperate? I mean, it's really a software problem at the end of the day. I think what Flexport's done on transshipping for freight has been just amazing. That's obviously too late for us, but we would have absolutely done something like that early. Multimodal transportation tools, so blending the different things we've got from scooters to ride shares to car share to public transportation, all of that, blending that all in. Tools around urban and infrastructure tech to enable urban planners and public planners to make better decisions to optimize what resources we have to do what's needed. Those are all huge opportunities. And then there's better on the complete opposite end of the spectrum. I would say our electric and energy utilities are operating on software that was really written 30, 40 years ago, and bringing those capabilities into today's software space is potentially huge. We have one company working on a corner of that market called Camus. They're working on replacing some of the edge software in the utility space. But that core software from billing, driving a billing system or a transactive energy model, all of those are those are marketplace models. Those are asset control models. They've been done elsewhere, and the utility space is a very conservative universe, and so we haven't seen that space presented really with a compelling set of solutions. And I think that's, again, a huge opportunity. I mean, that's a tens to hundreds of billions of dollars globally opportunity. So those are a few of the IT-centric areas that we've really been looking for. So we keep paying attention and understanding at the end of the day what makes these successful in our minds is not only developing the right product, but understanding how to take them to market, since a lot of those are very conservative markets. So understanding how a utility buys, how you need to build a company to intercept that purchasing pattern and not overcapitalize or spend it too early. So those are, it's a tricky space. It's much more difficult than a simple, enterprise IT tool sale.
So, given what's going on in the world right now, we are obviously facing an incredible lapse of sustainability on a global scale. How do you process that? Are there problems that you see can be solved with technology and scalability? How are you seeing things already? Are you thinking about, or you're looking for things in this domain?
So interestingly, almost everything we look at and everything we invest in actually reduces costs at the end of the day. And so interestingly, there's no sacrifice to be made when you move towards most, not all, but most sustainability centric software solutions or companies. The challenge and the perception that it's a more expensive thing is a little bit outdated. And so my take, especially as we're talking about sustainability software globally, is these, if profitability is a challenge, you should look towards sustainability as an opportunity to reduce costs. They improve efficiency, improve access, grow markets, shift. Obviously not everything's good for everybody. So what's good for alternative energy is probably not good for conventional energy. But if you're building a company and the trend is going in that direction, and most countries around the world, our country here accepted, unfortunately, are part of the Paris Accords, which will reduce the carbon footprint relative to prime numbers. That trend and those implementing those changes is again, it's an opportunity. It's an opportunity to shift value from a very old and outdated and non-sustainable ecosystem to a sustainable one. So again, it's cost savings. At the end of the day, it makes things cheaper for consumers long term, reduces volatility. I mean, all that we're seeing in terms of volatility that's taking its toll on the oil and gas industry today between Saudi Aramco and the Russians, that is not something you're going to see with alternative energy in nearly the same way.
So going back a bit to your first example of investing in this robotics technology, one thing that I'm monitoring is that we are probably going towards an accelerated pace of adoption of robotics technologies in factories. We've just gone through a tremendous shock where, factory workers can't get to work. And I think there's going to be, and that creates tremendous supply chain disruption. So the people who own those factories are going to accelerate their move to as much automation as possible and removing that risk of people not being able to come to work at a much more accelerated pace than the pace at, the trajectory of that industry so far. Coupled with that, there's going to be some, supply chain reorientation where countries are going to try to bring in more self-sufficient supply chains within their shores so that they don't have to depend so much on China and so on and so forth. So there's quite a bit of disruption and discontinuity happening in that space that accelerates the pace of automation. Now, do you consider, how do you resolve the sustainability question on this? In one sense, it becomes more sustainable as in the supply chains can be disrupted less readily. On the other hand, this also accelerates the employment issue, basically automation replacing humans and humans becoming further disenfranchised. How do you resolve this from a sustainability point of view?
So that's a tough question. I totally agree with your analysis that this crisis, among others, is shifting people towards, desiring more automation in general. I would say, based on also parallel experiences. So in addition to Amp Robotics, we have another company called Fox Robotics, which makes autonomous forklifts. And in much the same way, they've both experienced dramatic labor challenges. It's a terrible, picking recycling off of a conveyor belt, 8 hours a day is just it's an awful job. I mean, granted, some people have to do it, but they have huge issues staffing those roles. People won't stay in them. They're not doing them very well, and so it ruins the output quality. So you have to ask yourself, well, what's really the point of having a person do those jobs? If they're turning over that quickly because they're awful jobs, maybe there are some things that robotics and automation are better for. And nobody's going at these applications with an eye towards specifically removing people from the equation. They're going after them because they can't find the people. This is happening in agriculture as well. I mean, crops are being left in the field because at this point in the U.S. and the EU as well, there aren't enough people to pick those crops always. I mean, right now we have a whole different situation, but previously there's just been a massive labor shortage in some of these sectors. But with Fox Robotics, automating forklifts is actually, you could argue that's actually much more of a safety feature, right? There's not numerically that many forklift drivers in the world, but it's one of the most dangerous things you can do, between human operated forklifts accidentally injuring and killing people, and then the drivers themselves being injured. It's one of the highest injury jobs in a distribution center or warehouse. And so by automating that, you make it a lot safer. I mean, it's sort of the same thing ultimately for automotive autonomy. If you think about it as a safety feature, in the U.S., something like 40,000 people a year are killed in traffic accidents. If you could reduce that by half, kill 20,000 fewer people, what's that worth to society? Can we slow the shift to automation for manufacturing and in logistics and supply chain? I don't think so. I mean, we've been on this automation march for at least the last 50 years, and what it is productivity improvement, and ultimately it drops the cost of manufacturing. So that trend is happening whether we participate in it or not. We'd rather see it happen in the most sustainable way possible, and hopefully not erode jobs, but improve existing worker productivity. So to the extent that we can leverage existing workforces to have higher output, so the same factory with the same staff, perhaps instead of driving forklifts, they're overseeing the forklifts and some other automated equipment. It's safer, probably pays better, and it's more sustainable long term from a workforce perspective.
So from an entrepreneurship and venture capital point of view, I think manufacturing and supply chain and industrial automation is one of the greatest money-making opportunities for the next, certainly for the next decade. So I don't think entrepreneurs or investors are going to hesitate on that one, and they should not hesitate on that one. The bigger philosophical question is much more complex. If you're interested in that topic, audience, you can read my Man and Superman series on the 1Mby1M blog. I have dealt with this at a much bigger scale from a philosophical point of view and futuristic point of view, what is likely to happen. All right. Well, that was a very interesting conversation. We are going to switch, and Josh, I believe you can stay for 30 minutes to listen to some pitches. Great. So before we begin, I just want to set some expectations to those who are pitching today and those who will be pitching in upcoming sessions. Remember, this is a safe working session. We are on your side. So our only objective here is to give you honest, candid feedback that you can do something with. Whether you choose to do something with or not is up to you. You could disagree with the feedback you get here from me or from Josh or from anybody else you encounter in any of these sessions. but we will give you candid feedback, and you can decide what you want to do with it. It is your venture after all. One thing to remember, not all businesses can raise money, not all businesses should raise money, and raising money doesn't guarantee success. So do not, single-mindedly chase investment, especially venture capital, because that may not be the immediate path forward for your venture. So Sanket Thodge from Pune, India is our first presenter. Sanket, please unmute your line and tell us what you're working on.
Hi, Shramana. Thank you for giving this chance to actually speak for our product. And Joshua, thank you very much for speaking about venture that you. Thank you very much for the insights that you gave. So the name of my product is Mark and Park, which is into smart city solutions. We kind of use machine learning, IoT, and cloud to enable the way how parking is done across the world. So currently, there are a good number of challenges with respect to parking part. People are not able to find a parking space. A lot of time is wasted. Pollution, it leads to pollution, and a lot of factors are there. Is the people get frustrated by not finding the parking space. So we have built a solution wherein we have indoor navigation. We have plug and play sensors which will be deployed on the ground. We also have a software part of it. We have a point of sale solution, which is like to get the payment from the people who are coming to park the vehicle. So this is a product which is B2C, B2B, B2G. So with respect to parking, we are trying to cater as much as a better product to our customers. Samana, can you please go to the next slide? Okay, so that's me. My background is more into cloud analytics and IoT, blockchain and web mobile part. So I'm more into technical part of it. I have worked with Tata Consult Services on big data cloud part. Then I also provide multiple consultancy to the clients across US, United Kingdom, Switzerland, and many other. Can you please go to the previous slide, Shravana?
So the reason I flipped out of the previous slide is that this slide is not presented right. You have been providing expertise to clients across the globe, ranging from United States, United Kingdom, Switzerland, India. It doesn't really mean much when we're reading your profile. You would serve yourself better if you actually talk about specific problems or specific companies that you have worked with, even as clients.
Okay.
So let's focus on your business idea for the moment. We have limited amount of time. The most productive would be to focus on what is it that you're trying to do and how you're going to take that to market. And let's see if we can add some value in that process.
Yeah, great, fine, that's fine. So that's the problem that I'm solving into smart mobility and parking marketplace. So why parking? Because finding and managing parking is a challenge. So there I have listed the challenges that a parking owner faces and the challenges that a vehicle owner faces. So there are a good number of challenges with respect to how a owner is going to convert the people and bring the more revenue can be generated out of it. There are a good number of unfulfilled opportunities. Market is pretty close to 2,000 CR. So that is the Indian market. The global market is into 6 billion with the latest report. Yeah, we can go to the next slide.
So I'm just going to ask you some questions, and you may have these in further slides that are further out. Are you selling this product to parking owners?
So that is where my product is. So it is for the vehicle owner, and this is for the parking owner as well. So parking owners can be the commercial places like
office. How do you monetize? What is the business model of this venture?
So the business model also falls into two categories. So if it's a customer, then whatever booking they are making for the parking, I will be putting some internet handling charges into that. And for the B2B side, so that was B2C, where people will be booking the parking place before they leave from their home. And on the business side, it will be malls who will be using my solution. It will be the commercial places where my hardware will be installed, where my point of sale product will be there, and the booking request will go to them, and they have a different business model. So business model for B2B is different, and B2C is different here.
So that's why I asked you, are you selling to parking owners? And you said no.
Yeah,
that's not true. That's not a correct answer. Part of
no,
this business is selling to parking owners.
No, I'm selling to parking owner, yes, as well as to the vehicle owner. Both are my customer here.
Well, you have two different businesses here.
Yes, exactly, under the same.
So let's talk about the B2B side of it, because unless you get the B2B side to work, you don't have the inventory to go to the B2C side with, right?
Exactly, yes. So I'll be focusing only on to the B2B part right now.
Okay. So is that covered in another slide? Should we use the different slide?
In the next slide I'm covering that. So that's my go-to-market strategy for product. I'm having a POS app. So this merchant is someone who owns a parking place. So we have a product with the name of Mark and Park Merchant, wherein the owner of the parking place can manage the entire parking lot. Then we have a parking management desktop application, and we have vehicle detection sensor as well. It is LoRa and NB-IoT enabled. So we are the manufacturing of that product, and this product is a hardware sensor which get installed on the ground, and it gives the information about which parking lot is occupied and which is empty. So this information can be shared, can be utilized to optimize the parking space more efficiently. So that way, the parking operator, the parking owner knows which slot is available, which is not. They can also manage the workforce around that. That's the product. So target segment includes parking owner, vehicle owner, smart cities, and multiple government tenders that we have. Those can be the target segment. So vehicle owner is not primary as of now. Probably once we are able to cover good amount of B2B customer, B2C will fall in place. Thereafter, for sales and marketing, we have been part of multiple exhibitions, very much targeted to smart cities, IoT-based exhibitions. We can have a door-to-door visit in few cases if required. Cold calling can be another thing. Marketing can happen via digitally advertising and managed marketing. Promotion, positioning, we can.
Can you go into the details of what is involved in the delivery model for the parking owners? Let's say it's a mall or some large parking lot owner that you're talking to. What is the how much? What is the deal size? How is this structured?
So typically what happens is that whenever, let's consider a mall here, okay? So when we are considering a mall, there will be entry and exit. So at entry and exit, they will require boom barriers. If the parking lot need to be automated, then there will be the requirement of ANPR, automatic number plate recognition system. So we don't need a workforce there. We don't need human intervention. Automatically, the number plate of the car will be detected. The ticket will be handed over to the customer when the customer arrives at the boom barrier. Then customer enters. When the customer tries to enter, there will be thousands of parking places. The customer don't know where the parking place is empty or not. So there the sensors start coming into the picture. So sensors will be installed on the ground, and that will give our customer a indoor navigation. So it is just like the Google Maps navigation that we have from location A to location B, but here we are giving the indoor navigation very much specific to that given place, to that very specific customer. Okay, so whenever customer arrives, the customer will be allotted a specific parking lot number. Let's say out of 1000 we are allotting 971. So the customer do not know where the 971 parking lot number is. Usually if our product is not there, so what will happen in that case is that there will be tens of people who will be deployed there, and they will be guiding the person that where is that parking lot number or where is the empty space. But in our case, those tens of people are not required. The on their mobile itself, they will have a direction, and it will take the person to that given location. So that is what we are solving on.
How are you? So there's a technical question here. Inside the parking lot, often GPS systems don't work. How are you going to do navigation inside the parking lot?
That is our indoor navigation technology. We use beacons there. We are not relied on the GPS there. We are not using GPS.
Okay. All right. So now, what about the business model? Can you explain to me, when you go to sell this to a mall, let's say who owns a large parking lot, what are you selling? What is the structure of the deal?
So we are selling an entire solution to them. So it's not only a boom barrier or it's not only a sensor. We are selling an entire solution. So that again depends on what kind of mall that is, because there will be mall who just want to manage a parking lot, and there will be malls who want to add value to the customer. So in that case, when we go reach out to the mall, in most cases, being a startup, being a company who don't have any parking operation experience, we typically remain a technology partner. So what happens is that in that case, mostly the operations part of the parking is managed by some vendor, okay, and we go as a technology partner. So we help them with the entire technology, we help them with the navigation, we help them with the AMPR boom barrier, and most cases our job is over there. Thereafter, we hand it over to the operations team. That can be us or can be a different company as well, to manage the parking lot. So it's mostly a one-time deal happening between.
So this is a system integration project. You treat these as system integration projects?
Yeah, we can say it's a system integration project, but we are having our own hardware as well. So typically, when we talk about the system integrators, they are mostly a company who is taking products.
No. System integration is hardware and software. So this is and what do you expect the size of this system integration project to be?
This falls somewhere from 70 lakh to 2 CR. So if I convert that to, so
about $100,000 to
yes, 2.6 $260,000.
Yeah, $100,000 to $250,000. Okay, that's your system integration portion. Now, is everybody trying to build their own app, or are you trying to get them to plug into one app, which is what the consumer is going to install and can interface with all different parking lots in the city?
Yeah, so we are having our own single app, but that is again customized from customer to customer. But customization happen on the back-end part only, not on the front-end part, because some mall owner.
No, but what is the expectation that each customer, like consumer, is going to have a different app for different malls? If I go to 5 malls, I have 5 different apps on my phone?
No. It will be just one single app. Mark and Park will be the single app, and you will have the listing of all the malls nearby. You can go and park your vehicle. Just one single app.
And the business model on the consumer side is that the mall vendor is getting the booking fee and you're taking a booking commission out of each parking spot. Is that what you're saying?
Yes, right. That is on the B2C part.
I see. So for the foreseeable future, the business you're trying to do is basically a system integration business in the parking automation side.
Right.
Okay. What are your questions?
So I have a list of questions which I can just.
Do you have them on the slide, or is it something that you're going to be?
No, I'm
you don't have them on the slide. So go ahead with your questions.
Yeah, so that's the list of questions. Okay. I think that
Where is the list of questions? There is no list of questions on the slide.
No, not on the slide. I'm just sharing in the chat window here.
Oh, I see. not sure which product to make a primary product. B2C customers can book parking space, B2B small buy POS solution, B2B big can go for census. Well, unless the parking lots have the ability to do the back end, you will not, your B2C option doesn't exist because you will not have the data with which to do the B2C product. You've got to do a B2B product. And I think you should go straight with the malls and large parking lot owners and do your system integration projects, and that's a reasonable business. The smart cities and government tenders are, much longer sales cycle deals. So if you can get to doing some of these malls and large parking lots, municipal parking lots even, that's fine. But basically, I think private would be better than government, I think, in terms of getting things done.
Right.
You will not be able to raise money for this, and that is because system integration projects are not fundable. As I dialogued with you, the conclusion that I came to, and you agreed with that conclusion, that it's primarily a system integrator project, and that's not a fundable company. That's a bootstrap company, and it should be a very interesting bootstrap company, very profitable bootstrap company, but it is a bootstrap company unless later on you get to some other business model which is more product-oriented. As you do these services, system integration and services deals, maybe you will come up with a product that is more scalable in this domain, and then you can see whether it's a fundable project or not, but a fundable company or not. But at the moment, based on what you're presenting, it is not a fundable product.
Okay.
So let me ask Josh to weigh in on your business. And Josh, are you on? Your video has disappeared.
Yes, I am. Yep, nope, still here.
Go ahead.
I actually agree with most of your points, and actually would also recommend you take a look at a lot of the companies that have tried various aspects of this business and historically and have not succeeded. I mean, it just being a very small world. My partner was on the board of a company called Streetline in San Francisco that was actually doing exactly this. They had a proprietary hardware sensor. They tried to deploy it they successfully deployed it to both cities and garages. But the model had such long sales cycles and such long payback periods that ultimately it did not work long term. And there are other very low cost technologies which, again, if you're in San Francisco and you park in the 5th and Mission parking garage, it will tell you where the spots are, which level they are, which side of the building they're on. It won't tell you, exactly where it is, because frankly that doesn't matter as long as you can drive to that area sufficient. So, what's the minimum viable product, and what benefit does it have to those operators really? I think in that particular garage situation, it helps people find parking spots quicker and reduce congestion. So that seems to be a pretty good use case. But what's it worth to them is a second question, and that what is it worth to a fraction of that is what it's worth to you. So thinking through that, why would people pay enough to make this interesting for you? As customers.
Okay.
So, Sanket, one thing I would say is that you have a system integration background, and if you go at this from a system integration point of view and you start talking to malls who have large parking garages and want to do something like this and are willing to pay you $100,000 to $250,000 to manage these projects, you have nothing to lose, really. That's a reasonable business, and if this is something that you want to do, and you do, even if you do like just a few a year, 4, 5, 6 a year, that's already an interesting business. So you don't need to do something that is venture fundable for it to be interesting, and that's one thing that is different in 1Mby1M is we do encourage people to bootstrap their businesses. You don't have to build a venture-funded company. A venture-funded company has to go from $0 to $100 million in 5 to 7 years, but not all businesses have to do that. You can still build a small business doing this, on this idea. It's not going to be scaling at that pace, at a venture pace, but that's fine.
I just chime in. I completely agree with that. It's advice that I give people all the time. If you can, and I've built a company like that exactly because it was clear that we could ultimately bootstrap and then we owned everything. I highly recommend that if you can pull it off. It'll be much better.
Yep. Okay, Sanket, hope that's helpful.
Yeah, that's fantastic. Thank you, Shravana. Thanks, Joshua. Thank you.
You're very welcome. Matias, you're up next from Buenos Aires, Argentina.
Okay. Hello, everyone. Thank you for being here with me and to hear me. Well, I'd like to present VacaShopping.com. It's a marketplace, a B2B marketplace that is focused on the Vaca Muerta oil and gas basin. It's located in Argentina. The business model is a subscription model. Well, a little introduction. As I worked as a field engineer in Techint, it's an engineering company. I worked in Vaca Muerta, and also I'm from that specific place in Argentina, so I know all the network connections in that place, and I know both sides of the marketplace. I know all the demand side and the customer side, because I've been there as a customer in Techint, but also I have friends and family who have small and medium enterprises who are offering their services there. So let me explain first what is the product, okay? VacaShopping.com is a marketplace designed to build a digital community for small and medium enterprises in Vaca Muerta Basin in Argentina who want to promote their equipment, products, and services by helping them to manage a digital commercial channel where they can contact other enterprises and validate them. It's really important, and help both the offer and demand to boost their sales, okay? So what I want to do is to go back 1 minute, please. I want to help the small and medium enterprises in the first parts of the sales funnel, in generating leads and making the connection between the small and medium enterprise. Okay.
Matias, is your proposition to work with all small and medium businesses? I think I saw somewhere you're talking about oil and gas being the industry.
Sorry.
No?
With industrial small and business enterprises, it's focused on only in the industrial sector, industrial, construction, and mining. All the small and business enterprises that work for the oil and gas industry, okay?
Okay.
Not all. So let me explain you a little bit where is Vaca Muerta. So Vaca Muerta is like a Permian Basin in the United States. Well, we have the same, but in Argentina, it's the third largest shale gas basin in the world. So the potential is really high. And if you look in the Google Trends, you will see that not only we have people interested in Argentina, also there are people who's looking for Vaca Muerta in Texas and New York State. So I think that I can use Vaca Muerta as a beachhead market and then expand to other countries who are dealing with the same problem that we have here. Next, please.
Okay, so there are 3,000 small, medium enterprises in your segment, in your target segment in Vaca Muerta. Okay.
Yes. Then, if I start scaling, I'm aiming to 160,000 small and medium enterprises in Argentina in all the industrial sector, and then I can start scaling and replicating this model to Antofagasta, that is the mining city in Chile,
Got it.
Peru, Sao Paulo, and Monterrey in Mexico, for example. Okay.
Now, what you're trying to do for this particular segment, is there anything particular about how that works within that vertical, or is it a regular marketplace? I mean, there are lots of different marketplaces, and vertical marketplaces are very popular, very, very successful.
Yes.
There are lots of very successful vertical marketplaces. Is there anything special in that marketplace that you can work into the platform?
That's the catch. That's the catch. Because, for example, in Argentina, we have Mercado Libre. Mercado Libre is a world leader. It's competing with Amazon, eBay, etc. But it's not specifically focused on Vaca Muerta. Okay? So we have, for example, another example that's called AgroFi. AgroFi is a marketplace for the agribusiness in Argentina.
Agriculture, sure. Mm-hmm.
Yes, and they work in a specific niche. So I want to do the same with the oil and gas industry. I want to connect all the enterprises of that specific niche. So that's the main point here, because
and your business model is the traditional marketplace business model of a commission of the transaction?
No. I prefer to call it like a Spotify model. It's a subscription model.
Subscription.
I mean,
okay.
So
the first 3,000 companies that you want to bring onto this platform are going to pay how much to subscribe to this platform?
$40.
$40 a month?
A month. It's a small amount, but I think that if I can get a critical mass, it's enough to leverage this marketplace and to build some premium experiences that I can sell for more money. Okay. For example, a request for quotation platform or a documentation platform where I can sell it for $1,000 a month. Because what I found is when the small and medium enterprises, they tend to focus on the operation side, but they don't know a lot about the digital sales channel. So if I can help them boosting their sales and giving them helping them with the management of the commercial digital channel, I think I can sell a monthly subscription of $40. If for example, $40 here in Argentina is like paying the TV, the TV subscription.
No, I understand. So let's keep moving. What states are you in right now? Have you started this, or this is a concept stage situation?
No, I started. If you go back one slide, please. Well, in your left side, you will see an example of the website, of my website, vacashopping.com. And on your right side, you will see the actual offer in Vaca Muerta, okay? If you see on the right side, when you look for a small or medium enterprise in Vaca Muerta, you will only find a guide, or you will find an email and a contact and telephone, and that's all. What I want to do is like a marketplace. The enterprise can host a product, a service, etc. Okay. Next. So, well, this is the end user profile. Is what I've been talking to you. It's like mostly it's an engineer from 30 to 45 years, or from 45 to 46 to 60 years. The first type, the type A, they usually tend to have their profile, But the type B is really interesting because they are not familiar with the digital channel, so I can help them to manage their business. I think that's the early adopter that I can convince to catch and to sell this monthly software. Okay. Next. Okay. Here I have the business model, the canvas. It's huge.
This slide doesn't work. You should never do a slide like this. This slide has no value whatsoever because no one can read this.
Okay. Okay. I will try to improve that. Thank you. Well,
you can only put 3 bullet points on a particular slide. This is just too much text. It has absolutely no value.
The estimated cost on the phase, I'm in the startup phase. As I'm using a software that is really known, the technology, I don't have enough differentiation with the technology. I'm using ShareDrive, own software.
So this is your cost of what it would take for you to bring this product to market in terms of building your first prototype and all that?
Yes.
Okay.
I think that.
So what are your questions?
No, my
you haven't started this yet.
Yes, I started, but I'm not like launching it to all the population. I'm testing. So I'm doing some A/B testing with some customers, some prospects, but it's not like I'm actually in production. Okay. So for me, the question is, no, I like teaching was one of my first issues. So it is my first time teaching for the US. So if you can help me with that, I would agree.
So what is the goal of this pitch? This pitch is what are you trying to do? What is your objective other than launching this and doing beta testing and feedback from customers? What is it that you're trying to accomplish? The pitching serves what purpose? Are you trying to raise money? Are you trying to sell to customers? What are you trying to do?
Yeah, I'm trying to get a strategic partner that can help me to leverage with some money, like $5,000, $10,000. Not, I don't need much more than that. But also helping me with contacts in San Francisco and Texas. Because
what is the San Francisco contact expected to do here?
Sorry?
What are you expecting a San Francisco contact to do? Because you're just, if you're expecting that you can raise money in San Francisco for something like this in Argentina, that's not a correct assumption. You will need to raise money within your community.
Yes, I can raise money within my community, but I can raise
most likely from friends and family.
Yes, but up to $5,000 or $10,000, no more than that. Okay. After that, I need to raise money outside Argentina. I don't know. So the history.
But why do you assume that you have to raise money outside of Argentina at these early stages? Where is that assumption coming from?
Because in Argentina we always have economic issues, so no one is beside your family is going to lend you money. Not the banks or no one.
There is a venture capital industry in Argentina, and there are startups in Argentina. Argentina has actually done quite well in as far as technology startups is concerned. Argentina has done quite well, and I know a lot of venture capitalists in Argentina. In fact, Mercado Libre was one of my clients. So some of the founders of Mercado Libre have started venture firms in Argentina. So this assumption that you cannot raise money in Argentina, and for something that as immature as where you are right now, you expect that you're going to get money from abroad is a false assumption. It's not a correct assumption at all.
Okay. Okay.
So
Okay.
you're
So
gonna.
if you can
So I
help me
think
with.
what I will help you with. Why don't we? Let me just ask Josh to weigh in, and then I'll explain to you how to use 1 million by 1 million if that's something that you need some learning, and that's something we can help you with. Josh, please go ahead.
Okay. Thank you.
Yeah, I think your comments actually are more or less what I would have said as well. I think pushing this further along, friends and family to get it to the point where you can have that productive dialogue with understanding what your minimum viable product is. I think that's the right next set of steps. And domestically, if you have if you're benefiting those domestic companies, I would say even if it's not traditional venture capitalists in Argentina, there's lots of corporates, there's lots of business groups that would also be I would suggest also talking to. But
Okay.
All right. So for both of you, Matias and Sanket, I will explain how to use 1 million by 1 million if that's something you need help with. Both of you have quite a bit of learning that you need to get under your belt. So first and foremost, let me say that if you like what we are doing here, refer serious entrepreneurs into 1 million by 1 million. Building a business is not an overnight affair. It takes a long time to build a business. You are signing off 5 to 7 years, sometimes 10 years of your life or more in building a business. So you shouldn't loiter into that decision without really careful thought. And when you do loiter into this business, or when you do decisively step into the decision of building your own company or your own business, you are signing up for many years of really hard work. So that's just the reality of this world. Now, as far as resources that you can use through 1 million by 1 million, we are fine with all the, learning curve that you're going to need to climb in this process is exactly why we are doing this. We fully understand that as a first-time entrepreneur, there's a lot of gaps in your knowledge base, and that's what we're trying to plug here and help you, shepherd you along that journey of how to put one foot before the other. So we have no problems with your, sometimes misconceptions, sometimes wrong assumptions, just because that is very natural. We know that if you're doing this for the first time, a first-time entrepreneur's journey is a steep learning curve. So you can start at 1Mby1M.com, where you'll find a free blog series that is very rich. You can learn a lot from just following the blog. We do a lot of case studies. We do a lot of entrepreneur journeys that you can learn from, and all that is going to help you, improve your knowledge of the entrepreneurial process. You could also do the Entrepreneur Journeys book series, which is available on Amazon, actually digitally available on Amazon. So you can access it from anywhere you are right now, and Amazon is not delivering everything except for essentials. But all these books, there are 12 volumes of Entrepreneur Journeys. These are case study-based books. You can access them from anywhere. They're very reasonably priced. These roundtables happen every week. Everybody has time right now. Everybody's in lockdown. Everybody has time. If you attend these roundtables or listen to the recordings, you will learn a lot as well. Our full acceleration program is 1Mby1M Premium, and we offer you extensive methodology guidance. We have a curriculum that I would like you to study, especially, those of you trying to plug basic knowledge gaps. This curriculum is extremely helpful. It's a digital curriculum, case study based, with lots of video lectures and video interviews, regular text interviews, etc. But it's a very rich curriculum that you will very effectively, very quickly learn what you need to learn to navigate a technology entrepreneur's early stage journey. We help you with business development where we have contacts and you are looking for contacts. The strategy consulting, coaching, mentoring, whatever you call it, is this kind of interaction, and we have members-only versions of this private roundtable, similar format as this. You got a flavor of that today. We do help you with financing, but just by joining the program, you don't get introduced to investors. You're going to have to stay on and learn to become fundable. And not all businesses, by the way, succeed in doing that, but those who do, we then introduce them to the right investors. Because just like you're looking for product market fit, we're going to need to find investor-entrepreneur fit. You know, Josh is not going to invest in this particular company probably because it doesn't really fit his sustainability investment thesis. But there are other people whose investment thesis is more e-commerce, and there even are investors who are particularly interested in B2B e-commerce. So there are B2B e-commerce marketplaces. So there are investors who have come at different investment theses from different experiences and different limited partner pools. You know, the investors in a venture fund are called limited partners, and they also have their preferences of what they want to invest in. So all of that goes into figuring out who is the right investor for you. And geography is a very big factor in all this. It is very unlikely that a super early stage, pre-seed stage venture in Argentina, not even in Buenos Aires, in another part of Argentina, can successfully raise money in San Francisco. It's impossible. So you have to take all these factors into consideration and figure out what is your fundraising strategy. I suggest you go to the website, the 1M1M website, and do the self-assessment. It's a set of questions. It's a free tool, set of questions that investors are going to ask you. We would like you to go through these questions and try to answer them about your venture. If you get stuck, you could do 1M1M basic. Wherever you are in the world, it doesn't matter. You have access to 1 million by 1 million. And the curriculum you can do at your own time, at your own pace. It's a digital curriculum. It costs almost nothing, and you will learn a lot. If you put in 100 hours of learning into this curriculum, you're going to come out with a much more enhanced knowledge of how you want to put one foot before the other. So that's it. Go to the website, dig around, look at the descriptions of the various programs, premium, basic, what to expect. There are FAQs, video FAQs, everything in there. The curriculum is described in lots of detail. It is, as I said, a case study-based curriculum with over 1,000 successful entrepreneur case studies. That includes 100+ unicorns, 400+ venture-funded companies, another 400+ bootstrap companies. So you're basically getting the opportunity to learn from people who have done it before. So if you're doing, e-commerce marketplaces, we have lots of e-commerce marketplace knowledge because we have lots of case studies and we have studied this very deeply. So we can advise you very deeply, and you can learn from all these case studies and get a lot further because e-commerce marketplaces have been done before. This is not the first time e-commerce marketplaces are getting done. Even B2B e-commerce marketplaces have been done before. And so basically my point is there is methodology, there is blueprints, industry-specific blueprints, business model-specific blueprints that you can leverage by using this repository of knowledge and the coaching that comes with it. Our philosophy and methodology is entirely based on lean, capital-efficient bootstrap startups. We believe that you have to bootstrap first and raise money later because that's what people are looking for. People don't fund concepts. Investors don't fund concepts. Friends and family may fund concepts, but professional investors, institutional investors don't fund concepts as a general rule. There has to be something that has been done before, whether it's somebody's PhD thesis where the technology has been kicked around and some credible hypothesis has emerged. Something has to have happened for investors to invest. So that's it. There are we are working, 1 million by 1 million is a global virtual accelerator, and it has always been a global virtual accelerator since inception. So our workflow has not changed at all. We are going to be here every week. You can come work with us any of these sessions. And, behind the scenes, people who are our members, paying members, also get access to the private roundtables on a regular basis, week by week. And we are working. There's not a beat that we have missed in this global calamity that society as a whole is dealing with. So please use whatever you need to use of our offerings, and a lot of free touch points are also available, like this online rendezvous that I do on Tuesday mornings on LinkedIn Live, Facebook Live, and Twitter Live. Also, they're on every Tuesday. You can meet me at any of those as well. So that's it. We can do more Q&A if you like. Use the public chat to ask your questions, or call in and let us know that you are calling in so that we can take your questions. While you're doing that, let me introduce you to Irina Patterson, who is on the 1M1M team. And if you have questions about the program, you can ask Irina. Anybody, questions, comments? And Josh, thank you for staying on and listening to the pitches and weighing in. Very helpful. Okay, here's a question. I'm going to, just a second, read it out. It's kind of like an elaborate question. Abhijit Sengupta. Good evening, ma'am. Today in Indian ecosystem, a term called DRIP methodology is being talked about. DRIP, data rich, insight poor. Poor actionable business intelligence. There is too much information or data overload. What are your views on this? A lot of young grads who may be new startup founders ask, what are the startup sectors that may offer opportunities in the future? What will the startup ecosystem look like 3 years from now in a competitive scenario? Will technology companies completely take over? Young aspirants are looking up to founders for startup success stories. I'm not sure I understand your DRIP methodology question. There is an overload of data. There's no question. There's a tremendous amount of data out there. But if you want to build a product that is a data-driven product, you're going to have to provide actionable business intelligence. Otherwise, you don't have a business. Nobody's going to buy your product. So that's my view on that. What startup sectors may offer opportunities in the future? There are numerous. There are all kinds of AI-related technologies applied to all sorts of different verticals. There's, various kinds of consumer businesses, healthcare, fintech, everything has opportunities. You have to come at it with some domain knowledge, some understanding, some unfair advantage, and pick a problem to solve that you bring something to, some unique perspective with which to solve that problem. So there are plenty of success stories in the Indian ecosystem. So it's not like, 10 years back when there were no startup role models. There are plenty of role models now in India. And, but as I said earlier, startups are difficult. You have to come to it with great commitment and a serious understanding of what is it that, what would it take to be successful. Any other questions, comments? All right, folks, please stay safe. And hopefully, those of you who are currently running startups through and trying to navigate your ships through these incredibly turbulent waters, to the extent we can help, please reach out and we will do our best to help you. Thank you for coming today. We will be here every week, so please come back. Bye, everybody.
Bye. Goodbye. Thank you.
Bye-bye.